Jack, my friend, how's it going?
Oh, never better. Never
Another
better.
day in, another
Huge,
day in
huge day.
paradise.
Huge day. One of the biggest days I've ever had. Just
Nice.
just waking up to those positions, AVGO, the rest of the crowd up. Yeah, I love these days.
Yeah, we got a nice spicy little pop here on that softer than predicted PPI, producer price index.
Good morning, Dan and Will. Now, do you believe in that producer price index?
Doesn't matter if I believe in it or not, if it helps making the market move.
Yeah, that's true. But I don't know that it's making the market move. You know,
Yeah, it's just today's excuse, you know.
when they revise the job numbers down, you know that they can't get it right. So when they come up with a CPI or PPI, am not buying it. I don't follow it. I don't even care to watch it. But the market does, like you say, any little thing it can use to move up or down, it's going to take it.
It's um I kind of say the market's kind of like that show, Whose Line Is It Anyway? Everything's made up. The
Yeah,
numbers don't really matter. Uh,
right.
and the only thing I think that really truly matters, if a CEO gets caught with a dead girl in the back and all the company's money in the back seat. I mean,
Yeah,
a guy or a girl doesn't matter, CEO wise. But if they got a dead girl in the back and all the company's money, that's probably going to be a problem.
that's going to be an issue. Yeah.
So other than that, going bankrupt, the very few other things, buyouts, mergers, acquisitions. Other than that, earnings don't seem to matter. Forward guidance matters a little bit, kind of sometimes, but
Yeah.
not all the time. I mean, nothing's reliable.
No,
So
I just think it's interesting how the stock market reacts to economic data when the stock market is not the economy. So it's interesting to follow it from that perspective. But just so you guys know, I pay no attention to it. I wouldn't base a trade off of a CPI or a PPI. No reason to do that.
there we go. Got my screen share going. Ah, Jack, I got caught in one here.
Uh-oh. What
Chewy.
happened? You had a naked put?
Oh, I already had the shares.
Okay.
So it's not really bad. It just I my I got put over here at 39, rallying up. I had a 45 sold. I just thought this is something we could talk about since earnings back down. It's not a lower low. Yeah, I didn't panic over here, and I'm still not panicking right here. But
Well,
I
that
know
gap,
some of my followers that followed me on the trade. They're like, "Oh no, what happened?"
well, it
So
didn't work. That's what happened. But this gap up, I mean, this gap down is gonna have to be filled in. So that's
yeah, we
probably an overreaction anytime I see a gap.
we
And
left one up here
yeah,
that's going to be eventually filled, more than
so it's
likely.
got
And now we got
49
one.
written all over it.
Now we got one right here left open. So eventually this will probably come back up. I mean, this company, despite selling dog food online, as you said before, they're probably going to come back out of this at some point.
Yeah. Tough business though, man. Tough business.
I mean, it's just been in this range for uh, all year, basically. It hadn't really gone anywhere. And I'm just going to keep churning out premium is my plan.
Hmm.
Not sweating it. And in fact, if my technical pattern does play out and this maintains a higher low here, this reaction overdone right up there might be the target.
Good morning, Ellen. Yeah, I got
So
caught in a couple too. Um, AVGO. So my catch was I wrote the some 340 and some 350 calls when it was bumbling around 300. And so this morning I had to buy those back at a loss and then roll them out to the 400s.
you went up and out, I'm
Up
sure.
and out. So I took a loss when I bought that back. So when I first sold the 340s, that was like pure profit bringing that premium in. Then I gave that all back and some when I bought to close the 340s that I sold to open, and then booked that loss. And then I sold the 400s and I bring in a little bit more money, but not enough to cover the loss.
Yeah,
But I
so
get to keep AVGO, which is my goal.
you get to keep the shares and you make the money on the shares instead of those options.
Right. Yeah. My cost in this is ridiculously low. Been long it forever and still want to build a little position, but 2,000 shares would be about my top.
That's rich for me in my account size, but yeah.
Well, this isn't really a trading account. Uh, I buy and hold a lot
Yeah.
of the stuff that I trade in addition to that. And one of the funny things about why I'm doing this now is when I had my fund, my hedge fund, we had to be flat to the share at the end of every day. So it was just a day trading operation. And I looked back on this with one of the guys that was in another fund trading the same stocks, and we were laughing about it at the end of the year. If we would have just bought these things in January and sold them on December 31st, we would have made way more money than trying to day trade them. So, I really looked at that and put on some really good positions in NVIDIA, AVGO, ANET, some tech stuff that I love. And I just hold it and sell calls against it. And that's why the account got to be the size that it is now. But I didn't start out trying to trade all this stuff, just kind of buying and holding. And if you're in the right stuff, it's just been amazing.
Yeah, I mean, you say not a trading account, but you do trade in that account.
Yes,
And it's kind of a mindset thing. You're not actively trading
right,
aggressively. You're kind of buying and holding and making income on your positions.
right.
And it's just a mindset thing. We are
It
all
is.
trading.
Yeah. That's a good point. In that larger account, I also have margin, so I can do all kinds of trading in that account, but not really trading the positions that I'm kind of holding, just selling calls, selling a few more naked puts. But I've never been a buy and hold guy. But the last 5 years have been amazing.
Yeah, I mean, it's kind of like one of those fundamental shifts. I've seen some of my insider VIP group do this too. They've gone from, um, when you have a smaller account, trading's the only way you really move the needle at all.
Right.
You got to trade, you got to make some trades, you got to, but once you get past this certain point, and I can't say what the certain point is for anybody. It's been different for everybody I've worked with so far. But once you get past this certain point in your account size, all of a sudden you go, you know, I probably should hold some of this and just generate a little income on what I'm holding, and then use a smaller amount of money to still do some trades because I
Right.
really like trading. And I've seen people, my one of my favorite examples is Lieutenant Colonel Goose that follows me. His name's Dave Brawley. He's retired lieutenant colonel from the Air Force. He went from, he had his worst year trading pretty much ever in 2022. He was down almost $1 million, maybe more than $1 million. And he was panicking. He was afraid he wasn't going to be able to retire. He's being forced retired from the airlines. He flies for the airlines currently. He's being forced retired from the airlines next year. Age is out, too old to fly planes anymore. And he was kind of freaking out. Like he saw this timeline between 2022 and next year. He was down $1 million of his retirement money he was counting on. And, you know, thank goodness in 2023 and four, he made all that money back. He's now back to above even. And he's shifted a lot of it from actively trading it into a lot of dividend payers and things he can write calls on and collect extra income. And then now he's got a much smaller chunk of that, and he uses some of the margin off of those long-term holds to do stuff like the wheel strategy that we've been talking about. And it's a powerful shift, and I don't know where it is for everybody. Sometimes it's age wise, sometimes it's account size wise, and sometimes it's just you decide that the risk isn't worth the squeeze anymore, and you want to have more stability in your income. You know, and that's partly I embarked on doing this 50K challenge for me personally, I'm going to build this account up to a point where it generates $50,000 reliably. And really, I want to get to the point where that's $50,000 in dividends reliably. And then I can just do whatever. I don't have to sweat it. I don't have to worry about it.
Yeah, that's a great strategy because, well, I'm at 6,000 a month in dividends right now, which is nice, but it's nowhere near where I want to be. And one of the things I love about it though is it has the lowest tax rate you can get. It is only 15% tax on a qualified dividend. And if you have that in the right companies, your dividend investments, like for example, Coca-Cola, I tell people it could go to $5 a share. They're still going to pay the dividend. The dividend has nothing to do with the price of the stock. So that's a whole nother topic we can get into, but I think everybody should have that dividend portfolio built first, and then trade with the balance. But we should
Yeah, but
talk structure sometime.
building yourself up there, a lot of us have to start with trading. And that's, I wasn't born with money. You didn't come from money. I certainly know that.
None.
And yeah, you've got to work for it. You got to grind.
Got to
And a
grind.
lot of people don't understand that you can't just go with your full account. If you've never done this before, you can't just go all in, full risk, every position. You got to prove you can be successful at this. Trade small, one contract, paper trade for a while till you're confident.
And
And then
stick to a system that works and work the
yeah,
system.
when you take a couple losses in a row, don't be like, oh, this doesn't work anymore, bounce around and go do something else. You know, I'm sitting here doing this, proving it works. I mean, we look at the year, just this year, I started April 15th. I decided I was going to do this. Where's the big drawdowns in this account?
They're not there. That proves what you're doing is working, and it proves that you know what you're doing.
You know, and the crazy thing, I've only been doing this 4 months, Jack. There are thousands of people listed on K Info. Look at this. I am number 212 on the all-time leaderboard.
Wow,
212. Thousands
that's
out of
awesome.
thousands of people after 4 months. Like that tells me there's a lot of people that don't make money trading.
Most of them don't.
A
You
lot of
know,
people.
the thing about it is though too is that I've rarely been in any kind of a thing like that where there's competition and you get ranked. But one of the reasons I really wouldn't care about that being at the top so much is that if you're doing what you're doing and you like what you're doing and you're happy with what you're doing, I would never push myself to be the top dog on a trading platform when I'm just totally happy with what I'm already doing. You should
I'm
have a
not sure.
5-star rating there, though, by the way.
I have a 3-star rating. There's not 5 stars, there's 3 stars. My average gain, I'm on the leaderboard right up here, number 11 for all-time average gain per trade. 73% booked profit per trade. And my winning trades, I'm right up here in the leaderboard too. Right there, number 17 right now on
Awesome.
percent winnage. And that's out of thousands of people. And
Now,
this,
is
I
this
don't consider
naked?
it that hard to do.
Yeah. Well, once you know what you're doing, it's not hard, but figuring it out is the hard part. Once you've got it, you just roll with it. Now, is this starting off with naked puts, or is there another strategy involved?
I so I do mostly the what I call the turbo wheel, which is combining my technical pattern and the wheel strategy together. And then I have a few positions that I just trade long shares on my technical pattern in smaller quantities. I don't trade a full size of 100. Like I have some McDonald's bought that way. I have some Progressive bought that way. A few other stocks that set up my high probability technical pattern, and I just bought a smaller chunk than 100, so I can't do. Like McDonald's is expensive for me. I only have $100,000. I don't want to put half the account into one trade on McDonald's. I'd rather, we were talking about this yesterday on Profit Panel. I decided for me, I started out with 5 positions. Take $100,000 account. That's roughly where I'm at. I'm actually 115, I think, and 5 positions that gets you about 20K per position.
Nice.
And recently I decided to move that up to 6. So it pushes it down to, roughly 17, 18K per position. But I'm flexible on that. I can run it up to 24. I can run it down to 12 and I'm not locked in. But it's my personal decision. It's not there's no rules to this, It's all my rules. And this is how I'm managing it. And I may move this up to 7 in the coming weeks ahead. Just because I don't want any one position to lock up my whole profit generating system.
Yeah. Unlike me.
Well, I mean,
I'm
everybody makes their own decision, what you're comfortable with. You've got a big chunk of Microsoft, a big chunk of IBIT, a big chunk of AVGO, and you're happy with that.
right.
And you know, I'm sitting here operating on a much smaller scale, and I'm trying to move the needle a little bit on my week to week. So
Nice. I got a little McDonald's story to tell the good folks at home. You may have heard this one, but I believe that you got to get your kids into the game as early as possible. The game being the stock market and finance, because it's pathetic the amount of financial illiteracy we have in America. And it doesn't have to be that way. I mean, we're proof of that, both Jeffrey and I. But I wanted to get my son, Jack, involved in the market when he was 7. So on his 7th birthday, I bought him 7 shares of McDonald's. That was in 1986. He's up,
uh,
the last time I did the math, he was up 4,600%. Can you go back to 86? Yeah.
yeah, we're gonna see if
But
we can. Right back here.
he was a little happy and he was a little sad because, kids hate it when you give them like triple E series savings bonds or something like that. I give him stock certificate. He looks at it. He's like, what the hell is this? I go, just cool your jets, young man. You understand McDonald's business a little bit, right? They're making food and they mark it up and they sell it to you. And it's nice to know that you own a little piece of a business when you drive by it and you see there's cars wrapped around the building, right? But he got in this one and he reinvested the dividends, and he wasn't really crazy about getting stock for his 7th birthday. He wanted a mini bike or something. But now McNuggets, Mike, yeah, he's up 4,600%. And he used that as an asset to help him buy his house, and he didn't sell the stock. Just like all good. Next is covered calls, and then you're on from there. But this has been, look at this powerhouse of a stock.
Yeah, just
Mike,
in share appreciation without compounding or
uh,
anything, you're six
without
thousand
comp-
percent.
so we're reinvesting the dividend and so forth and so on. And this stock has been so good. I have a vegetarian sister who she's never eaten meat in her life. She hates McDonald's, the thought of it and all that. And then when I'm managing her account, she says, and make sure you put some McDonald's in there. Because she was so jealous of what my son had accomplished by doing nothing, right?
Yeah. I mean, it's the power of long term. I'm sure back in 1986, he, a lot like me, would want GI Joes or Transformers or maybe just Happy Meals themselves,
Kung Fu
not the
grip.
stock.
Remember that GI Joe with the Kung Fu grip?
Yeah, GI Joe, He-Man.
Stretch Armstrong.
But days gone by. That's
What?
it proves that kids may not necessarily know what's best for them.
That's right. But hey, you force them to give you a little, like my grandson, little Jack, he's got Aflac, and he's got to check in with me and tell me what it's doing, and report in on that. And they get to pick the stock. My son didn't pick McDonald's, I picked it. But my grandson picked Aflac because he's seeing those commercials, watching college football, and that's a great stock to learn about. And my granddaughter picked Starbucks. She's 12, and all of her and her friends love Starbucks, which I don't think a kid under 21 should be allowed in a Starbucks. But that is not good for her, man. It's
Hey, that's I mean, coffee. I don't know.
it's a thing. But kids under 21 should not be going in there buying gigantic frappuccinos with all kind of foam and sugar all over it and caffeine. That's no good for her. But hey, what are you going to do? They're going to get it. They're going to get it. They go to the mall. They're going to buy Starbucks, her and her girlfriend. So I tell her, hey, you got to watch this now. It goes down. She's crying. It goes back up. She's happy. Typical investor. Probably same calories as a Big Mac, Bodine says. Yep. Yeah. My son doesn't eat at McDonald's though either, but it's just a money making company. and everybody can understand it. And they had a great jockey for years. I'm not sure about this new guy, but the last guy, talking about a good jockey, man. Starbucks, not so much. Jockey here not doing it.
A lot of sideways action here
Got to
for
unlock a lot
bunch.
of value in there. Yeah.
Yeah, we're having trouble here, struggling. We got lower highs. We're just kind of going sideways. Opportunity to break out of this funk and go higher, but just not doing it so far.
Not doing it. It is in a funk. That is the exact right word.
And
Katie wants to see Apple.
yeah, Apple. We can look at Apple. That's another one needs a new jockey. I think we're kind of stuck in a
Yeah, this
rut
guy's
here.
he proves it every single day the market's open that they need a new jockey.
Yeah, we've just lost the momentum. We've got, it's one of the three biggest companies in the world right now, and unlike the other two biggest companies in the world, this one just not doing anything for a year at all. I
Yeah,
mean,
it's lost its luster, and it's they really bend over backwards to try to bring some news and some spice to a new phone, but it is not happening. It just is turning into a boring company with a cult-like following, but that's about it.
yeah, that to me that right there says, tells the story. You look back, draw the line back. We're flat for over a year. It's kind of just stuck in the mud. Stuck in the mud.
No news, no reason to buy. That's the other thing. It's kind of been dead money.
Yeah, it's kind of like, you look at the world, everybody's jumping on the AI stuff, and they don't really have a serious plan to do anything with AI. They don't want to run their own data centers. They don't want to, they signed a deal with Google to use Gemini instead of OpenAI. So what
Yeah,
does that do though? That pumps money into Google.
that's the problem with this guy. The phone, iPhone is not really a phone. It's a computer that can act like a phone. And they should have done what Tesla did. They should have had a car by now. They should be the leader in AI because you interact with your phone every single day, multiple times a day. Why that doesn't have the benefit of any kind of AI is it just goes to show you this guy's got to go.
And they were the leader with this stuff with Siri. I mean, everybody
Yeah,
know like the jokes are it's just, why isn't Siri running on, talking to G Mini in the background, Gemini,
yeah,
or whichever, and just, killing it and crushing it and
yeah,
building the moat. But
yeah. And
this
thinking what you're going to think, and taking your what you're doing with your phone and figuring out what you're doing, and then just jumping ahead and saying, "Here, you can get that airline ticket for this much or whatever." But it's a sad state of affairs for Apple. They should have beat Tesla to the car and had the Apple car. That'd be another computer that acts like a car, like the computer that acts like the phone. But it's funny that they're not doing anything with AI. And then you look at the news on AVGO, and his whole that's why it's up today is Hawk Tan said, I'll just take my salary or whatever based on AI's revenue, right? Crazy. If it doesn't work, he ain't getting paid. But he wouldn't do that if he didn't think it wasn't going to work. So
and how about this one that report, misses on the top, misses on the bottom, for anybody that doesn't understand what that means. Top is earnings, bottom is revenue, missed on both, still up 30% in one day on a behemoth stock.
41. That makes no sense how the market can move. What's the market cap on Oracle? How they can move that 41% is that's just crazy, man. $961 billion company moves 40%. I don't know if
Yeah,
I've ever seen that.
it's basically $281 billion today because 2.81 billion shares, $100 move, move the decimal two places. That's $281 billion in market cap added on in one day.
Man, that's a huge move. Now, folks, if you're in Oracle, that's your sell signal. This thing doesn't go up $100 a day, right? If you're in it and you get a pop like this, you got to take it unless you're a long-term player, in which if you are, you'd want to obviously sell a covered call up here at an even higher price if you own the stock, or get out. That's a big one-day move, $100 a day. Wow.
Yeah, sell a covered call, maybe use some of that money to buy a put down
Right.
a little bit because it's likely to pull back and then you can collect on that put.
Yeah, that's a good strategy to bring up, is the married put. Like whenever, I really think if you're in the stock, it's up $100, you sell it, right? Take advantage of the pop. But if you wanted to stay in it, you could sell a covered call against it. You could also buy a put that's at the money that way. And you could do that on any stock that you have a huge gain on, that you're worried about a little pullback in that gain. You buy a put for insurance. And if the stock goes down, the value of that put is going to soar, and that's going to offset any loss you took in your stock price. And if it doesn't go down, you've wasted the money. If you want to look at it that way, you're going to lose 100% of it. But you bought insurance, and that's what you buy. I mean, you buy insurance on your house and car and everything else, and you don't use it, but you want it. So if you have a big gain, consider an at the money put. But again, if I was in Oracle, I'd been out this morning and already fishing on the river.
Yeah, looking at this, it's got there's a little bump at 3 months out, and the most volatile is the next couple weeks.
Right.
So looking at roughly 3 months out, that put us roughly in December. If you're on a play out here, you come in, sell like upside call. I mean, this is pretty rich premium. You could be up here at 400, maybe even higher. You could come up 440 is the highest you can go right now, according to this option chain. You could sell that for $10, come down here. You could buy that longer term put. You don't have to go right at the money. You could even go a little bit lower in case we get a bigger pullback. Something down here, spend some of that upside profit, buy that put. If we get a bigger pullback, then you cash that out. As soon as we pull back, you cash it out
Sell
when
the
it's showing positive.
right.
And then you can buy another one if you want to keep the put action on, but you kind of you book your profit. And then if you want to keep the put, you find a new one with lower risk. You don't up your risk. You cash out. The point is to book the profit, not to keep upping the risk on the put, because ultimately, you kind of want to keep this going higher, but a pullback is normal and expected. So
Got to sell that put. You don't want to just carry that on the books. You got to take a profit with that if it goes down.
yeah.
How
So
about Hood? Stephen wants to see Hood. He's considering this as a covered call stock. That's what I have it as, a covered call stock. I'm long
so
a ton of Hood.
for me, it has this. I made a name for myself doing something called echo trades. And stocks tend to do these repeatable patterns where we get a pullback, an advance, a pullback, an advance, a pullback, an advance.
Look at
And what do you
that.
think is going to happen next?
Yeah.
So right now, I'm looking for a top in Hood somewhere up here around 140, 150, and then probably a pullback. So just so everybody knows, I mean, this has been doing this same pattern for a couple years now.
Yeah. This is a great one for naked puts, folks. Great one for naked puts. And the beta on it is pretty good. And the call options are amazing if you're selling them. So yeah, if you want to get in on a put, it's pretty affordable.
Yeah, just to rehash on the beta listed on here,
Wow.
3.2 right now. So
So beta means, everybody, beta is a measurement of volatility. A beta of one is what the broad market has, SPY. Anything with a beta over one is going to have more volatility and therefore higher prices in the options. So we want this stock checks all the boxes. We want a stock that's trending higher first and foremost. That absolutely positively has to be the case. This is trending higher. It's relatively affordable. It's not 300 or 400 bucks, right? So, you can get into this thing decent. And once you got that trend, you got everything at your disposal. You can do credit spreads, covered calls, naked puts, all the income style stuff on a stock that's trending higher. So this one, I'm long it. I couldn't give it a better endorsement. I think it's got a lot more room. We talked about yesterday this adding all the options that Poly Market has, where you'll be able to bet on anything and everything. You'll be able to bet on how many times Jerome Powell uses the word recession. You'll be able to bet on literally anything you could think up to bet, you can bet on Poly Market. So that kind of stuff is really going to add a lot of revenue to the bottom line on Hood. I like the story. I like the management. I love the trend.
And one of the interesting things, they had a big, I don't know if they call it Investor Day presentation yesterday or last night, and their online platform, they're making it more like other platforms. But one of the cool features they added was the ability for people like us to just type in what kind of indicator you want, and they have an AI integration that will build the indicator for you into their platform, no matter what it is. And if you're like, I want to take in how many times this did this versus that, and possibly you want to look for the bullish pattern that we talked about, where when we break out, make 52-week highs after a 3 to 6 month consolidation, we tend to run for 6 to 12 months. Then we did it again. Then we did it again. And then we might do it again right there. So
Right.
this is, it's got the pattern that Jack and I have been talking about for almost a month now, where
Mhm.
if you consolidate, you make 52-week highs after consolidating for 3 to 6 months, you tend to outperform the S&P for 6 to 12 months on the next expansion. And that outperformance is 30% outperformance of the S&P when you find this pattern.
And the first pullback after a new high is almost always buyable.
So there you go, Jack. Speaking from market maker experience right there.
Okay. All right. The next one up is ticker B.
Barrick Mining, pushing the limits of my expansion here. But when you zoom out and look at it,
Now
while it
that
is a
fits
fit,
our pattern of lower highs, kind of. If you go back there,
yeah, it's definitely lower highs. I would be very cautious if you were in this move. While it can continue to break out and go push these highs, it is in a cautionary point right here.
it
That's
is.
it's in a good place to pull back.
There's better things out there too.
I
Gold
would be very
itself.
cautious.
Are you doing anything with gold? GLD?
uh, I do a weekly trade on it, and today it looks like if we maintain this bullishness here, we're probably going to get into a gold trade for this week.
That
So
thing has got to come down.
it's yeah, I mean, that's an exponential move. You just look back at the last time we did some kind of crazy move, which wasn't that long ago, and we spent months going sideways, with a big negative pullback immediately. So it wouldn't surprise me to see a big, large negative pullback and some more consolidation.
Yeah, just profit taking, because gold doesn't do anything. So when it's coming down, it's not because it's bad, it's just profit taking. People have made so much money on this thing, it's ridiculous. I think this has outperformed the stock market
Oh,
overall.
definitely.
Yeah, I mean, how crazy is that?
Yeah,
Makes no sense to me, but nothing
you
does.
just put on something like S&P 500, and we can turn off my orange line there just so we don't get confused. You go back to 2023, and this has been the bull run, right, on the S&P. But look at gold up here, 100% upside since that low, while the S&P is only up 70%. I
Let's,
mean,
let's compare IBIT to GLD.
yeah, easy.
Has Bitcoin been better than gold?
We'll have to, since IBIT came out in 2024, we'll have to pull that back a little bit, right to the beginning of IBIT, and IBIT has actually outperformed. This is IBIT. Its performance 143%, while gold was up 78% in the same
If
time
you would
frame.
have asked me back when this started in 23 or whatever, will gold and IBIT, two stocks, if you want to call them, that don't do anything and don't have earnings, don't have a location, don't have a board of directors. If you would ask me, would it be possible for something that does nothing as an asset to outperform the entire stock market? I would have said no way. I mean, think about it. Isn't that weird? I mean, you got two basically commodities that have outperformed 500 companies.
Well, Jack, you and I, we have a history of talking about crypto, and you're kind of a crypto convert.
Well, I'm not. Yeah, I don't know what I am. I still don't believe in it. If it all went away tomorrow, it wouldn't surprise me. It doesn't do anything. It hasn't been adopted. They were talking about mortgages won't happen the same way, that blockchain's going to change everything. So far, it hasn't changed anything. So
Yeah.
I'm only a Bitcoin convert because it's going up. But when it's
Well, it's going,
going
it's,
down,
it's, but it's not just because it's going up. It's because it's going up in a volatile way
yeah.
that provides lots of premium for income trading.
Right. Exactly, Mike. That's why the very first switch I made was, you can just take any stock and you take an option 30 days out, and what can you get for that option? You divide that premium by the stock price, 1, 2, 3%, whatever. But just doing that comparison is what I do a lot of times. And when I did it first on IBIT, when the options came out, there was not any higher percentage call options you could sell than the ones on IBIT. So that it even had better pricing than NVIDIA calls that I do, Google calls that I do every month. It just had unbelievable pricing. So that was part of my conversion, is that I want to make, I'm an income trader. If I'm going to sell covered calls, I want to do it on the stock that's going to give me the biggest bang for the buck. And that's when I became an IBIT convert. And also because a couple guys I follow that I have a lot of respect for, Israel Englander, uh, a couple of these guys, they just poured billions into it. And so I thought, hey, maybe he knows something I don't know. And I made the move then as well.
And that IV term structure, I mean, that is beautiful. Look, the longer out there you play, the more you can get.
Yeah. So that means if you're selling a 1 year call versus doing it every month, you're going to make more money.
That's just, there's not many things out there like that.
I haven't seen too many. Yeah, and again, the pricing, is people ask me all the time, Jack, what can I do covered calls on that's not expensive, right? It's not 300 or 400. Well, this is unbelievable. You could buy this for $3,235. You could buy 100 shares for $3,235. Uh, that's awesome. You could do a naked put with just 20% down, or with the full cash, 64.50 down. Um, so this one has it all: credit spreads, naked puts, covered calls, and a nice trend. And, probably seeing a 1 year great trend on this one.
Yeah. And, this one of the advantages here of IBIT over just going to buy Bitcoin is you can cash flow it. You're not locked in to just buy and hold. You can sell upside calls. You can sell at the money calls. You can sell puts. You can, do other trades on top of it. And that's a real advantage
Yeah. The
over
price,
just buy and hold.
price, the trend, and the beta. This just makes this thing super sweet. What's a 1 year call
Yeah,
looking like? Say 20% higher. I don't know. How would you pick 1 year out? Like when I go a month out, I go 7 to 10% higher than where the stock is at, depending upon how volatile the stock is. But a year out, I don't
right
know
now,
what kind of strike I'd look at.
right now, there's not a September in 26. So you'd either be slightly less than a year in June or slightly longer in January. You'd have to make your first decision. You got to figure out, am I going slightly longer than a year or slightly under a year? And, maybe you want to go out to 27 right here. Ties up your money, but maybe that's where you want to be. And we can talk about what's the market pricing in, right? How high do you want to be? What's the market pricing in? Right now, we've talked about this on the show before, but if you're new here and you have no idea what we're talking about, you come in here and you take this number, that's the ask, No, lower number, excuse me. They flipped it around on me on this screen. Sorry. You take the bid. You want the bid number because you're going to sell both sides. You take the bid. They're both pulled to the center. Take the bid on the at the money. It's trading right here just under 65. So the at the money. Take these on both sides, the bid on both sides. 15.55 on the call side, 12.50 on the put side. Add these babies together. That's the expected move between now and January 2027. And
Based
that's
upon the options market makers pricing, that's what they expect it to be $28 higher
28
January.
higher or 28 lower.
I don't see that.
It could be either one. I mean, that's the way this works, though. It can be either way. So if you were to come in here and you're like, I don't want to be in the money. I mean, this is a personal decision. If you definitely want to be in the money and get called out, you go less than this on your upside if you're going to sell a
Lower
call.
strike. Yeah.
If you definitely, you want to have a good chance of not being called out, you go above this. If you just want to flip the coin on getting called out, go to 28. That's what the market makers are pricing in. They're smart people, lots of experience, why bet against it? So you take that 65, you add 28. I'm going to have to pull up a calculator so I don't do math errors here. Too many math things bouncing around my head. 65 plus 28, 93. You roll up here. You don't have a 93. You have a 95 or a 90. So you have to decide. I'm going to sell 90 or 95.
I'd take the
And
95. I'd sell that for $700, $705.
So right there. Sell that baby. And lock it in. And then you have all the gain from 65 up to 95. $30 of upside on the shares. Plus another $7 in premium. Took in right here. If you got called out, you made $37 a share and tied up the money from here out to here.
And your yield would be?
That's almost a 50% gain.
It is a 50%. Yeah.
Let's see, 37 divided by 65 cost right now. And I'll pull back up my handy dandy calculator just to make sure I don't mess this up.
So let's see, who asked for going a year out? That was Arthur. So there you go, Arthur. You got it. You got it. You can do it either way. You can go a year out, Arthur, and make 50% without and sleeping good at night between now and next year. Or
it's actually 40%, but yeah, there you go. Right around 40% gain.
There you go, Art. Knock yourself out.
Now you could do the same thing on the put side. 28. If you wanted to get the same kind of gains, we should do this exercise, Jack, and see, like, is it better to buy that and tie up the money, or is it better to sell the put on the downside? So 65
Probably
minus 28.
It's just that puts are priced higher,
Well, this is at 37 would be the strike. So we're down here. You don't get as much premium, but we can sell more. You can sell more of them, or you can come up a little bit even. Let's just do it at the money. Let's just tie up the money here and see what we get. So that's 260. We're talking about the 37 put right here. Get basically 265 per contract, and we're going to tie up $37 per share to do that. Pop back up the handy dandy calculator. I just closed it for whatever reason. It was beautiful. So 265 divided by 37 per share. That's a 7% return on your money right there. But the price can go down a lot. That you would have to, IBIT would have to go up to that price on the covered call to get that 40%. If we stay above 37, so that leaves you a huge pullback, $28 pullback on IBIT, and you still collect 7%
Oh,
right
man, that's
there.
a great way to trade. He likes
Yep.
doing the monthly covered calls.
Yeah.
That's good
So I
too.
mean, you can go out a month and keep doing this over and over, and you just do the same thing. You grab the whatever month you go out to. If it's October right now, it's a little over.
Where I'm at.
That's 37 days out. A
I
little
sold
over
the
a month and a
70s.
week.
I sold the 70s and the 71s a while back.
So we look at the expected move here. Roughly a $6 move priced in, $6 up from 65. It'd be 71. So right in line with where Jack is. You can see Jack's position right there, 30,000.
Now, just so you guys know, if I get called out on a lot of this, I'm gonna let it go. I'm not gonna buy it all back. I got 3,300 shares. That's more than I want to have, but I got that position with through naked puts, so my cost is pretty low. I'm happy with it, but I don't really, if I don't get called out, I'm fine with it because the cash flow is huge. I just get to do it every month, but I would like to pare that position down a little bit. So if I get called out on some of it, I'm good with that. 3,000 flat would be good.
And see, you can come down here to 59 right here today, sell that for $1. You've got $6 of downside out for a month, $6 of downside, and get that return right there. If it comes down here, you get put. If it stays up here, you just collect the money and move on. So
Yeah, Nancy, IBIT moves tick for tick with Bitcoin. It's not leveraged. It's a spot fund.
here's a spot fund, and they've got you have to look at the prospectus, which is linked in here. You can go get it. One of these links right here has it. I think homepage right there. You go in here and you can actually look at the basket. The ratio is not penny for penny or dollar for penny or whatever. It's not Bitcoin's not $6,000, so it's not a 10x. It's not 100x. It's not $60,000. So it does have a divisor. It's roughly 1 for 20, I think, or 1 for 200, I think it is. One share gets you 1/200th of a Bitcoin, roughly. But you can come in here and read the prospectus and see what the exact basket size is. It may not be exactly 1 for 200. So it's kind of like QQQ is like 1/41th of NASDAQ's price, and SPY is roughly 1/10 of SPX. So this is roughly 1/200th of Bitcoin's price. Roughly, or maybe it's 1/2000th. I can't keep up with the math. Anyway, so that's the way you figure it out. You go look up the prospectus, and there's no universal like rule that applies to everything. It's on a per basis based on how, in this case, BlackRock created the basket, and you can't take that and apply it to the other ETFs either. Like they all stand alone. They're all different depending on their management style. Alrighty. Jack, you want to talk about your other favorite high volatility stock?
NVIDIA?
Ah, Tesla.
Oh, yeah. Wow. This thing, I think we kind of cracked the code on this one. We've got a special type of trade. We do a debit spread on this, and we only do it when we get a green light. But I think this has had 7 or 8 winners in a row, the way we're doing it.
That's pretty
And
good.
it's pretty good. And Tesla has some just very unique things with it. Not with the stock, but with the options. You can make money with the options on this regardless of which way Tesla's stock is moving. And we should probably get full into the way it
Well,
works.
you want to talk about this debit spread thing? We haven't really talked much about debit spreads today at all. And for who's new here, let us know in the chat right now. If you want to know a little bit more about debit spreads, let us know right now in the chat. If you're
And how to
brand new,
apply.
and this kind of conversation is interesting to you. Dave says yes. So, we've been talking about selling credit, selling puts, and selling calls to generate income. Most people don't think about a debit spread, which means you pay to get in the spread as being an income type trade, right? So what we're talking about is for an income or for a debit spread, you're going to, we at the money, this lingo in options here, in at the money, we're going to buy the closer to the at the money option. Whether that's on the call side or on the put side. And then we're going to sell one further away from the money.
We're doing this on the call side. So why we do this is because if you bought one call on Tesla, it would cost you $1,955.
Yeah, at least out for October, 1 month out
Yeah,
basically right now.
so that's crazy high, right? Now you're going to offset that by selling the next higher up strike price.
And so we're
So
going to
we would
buy and then we
buy the,
sell.
yeah, yeah. And so we go from paying $1,965 for one call down to $240, right? So instead of paying 1,965, you're in the same trade for 240 bucks. And the craziest thing about that is you can hit, and you can't do this on a credit spread. You can get 50% or more in a little over a week, like a week and a day.
Yeah, so
That's
if we
crazy about this thing. It makes a little move as long as Tesla makes its normal little move. This is called a wrap order, where you're buying an at the money call or slightly under, and then you're selling the next call higher. And that's going to reduce your cost. And it's still going to give you a chance to make 100% or more. But we get out of these. We put a good till cancel sell once we get filled. We put a good till cancel order to sell it at a 50% gain. And the longest we're in the trade is 8 calendar days.
so right now we've got a $2.50 difference in the strikes. If anybody doesn't know how that works, it's 355, 357.50. That's $2.50 difference. 250. And right now, if you got into this, you bought the closer to the money, you sold the further out, you're going to get $1.20 on that's how much it's going to cost you. So it takes the differences of strikes, subtracts off of $1.20. That leaves you with $1.30 potential as the max potential profit. Your max potential risk, what'd you pay? Your max potential profit, capped at difference in the strikes. That difference between those is how much money you can actually make in this trade. And Jack is saying, what do you go for? Like 50% usually?
Yeah. Yeah. So as soon as you get filled on your debit, you put the order in good till cancel for sale at a 50% profit. Now, the
So
craziest
Jack's
thing about this, and I don't want people to get this built into their head, but a lot of these trades we've been out of them the next day because we're only getting into it at a specific time when we get the green light on Tesla. And that way, once we got that green light, Tesla just has to make a 1 to 2% move, which it normally does. That's not a big move for Tesla. And once that happens, we get to cash out and got a lot of great help picking these. What goes into the green light? It's a little technical pattern that has to happen. More than I could explain here, Arthur. But the green light gives us a signal. We don't get the green light on Thursday. We don't do it. But we got one piped coming in hot tomorrow. So if you want to get in on that trade, we'll explain how you can.
and that's, so basically instead of trying to get the full 250, you're really trying to get out at about $1.85 if
Yeah.
this were the
Yeah.
trade right now, if it was green light, if it was Thursday, if all the pieces came together, that's what we would be talking about.
Yeah.
Let us know in the chat if you want to know more about this right now.
7
Anybody?
weeks in a row. we've hit that. And like I say, I love credit spreads, but this is a great complement to that because you can't get that 50% in a credit spread in a week without taking tremendous risk. Here, we're not taking so much risk, but we're still positioning ourselves to make 50, 54% in about a week's time.